You apply for an apartment and get denied. Not because of your income, not because of your job. The property manager just glances at a screen, frowns slightly, and says, "Unfortunately, we went with another applicant." You never even find out why. A few weeks later, you finally get approved for a credit card. But the interest rate is so high, it feels like a punishment for a crime you don't remember committing. Here's the uncomfortable truth. There is an invisible number following you around, silently judging every financial decision you make. And most people your age have absolutely no idea how it actually works. If you feel like you're constantly getting the worst deal compared to everyone else, higher interest rates, random rejections, confusing fine print, I need you to understand something. You are not being unlucky. You are living in a state I call credit invisibility. And today, we are going to fix that. Let's look at where you actually stand. Right now, the average credit score for someone in their mid-20s sits somewhere in the high 600s. And it only creeps into the good range as people age into their 30s and 40s. That's not because older people are smarter with money. It's because credit scores reward one thing above almost everything else: time. And time is exactly what you don't feel like you have. But here's what nobody tells you. You don't need decades to fix this. You need to understand 4 hidden levers that most people your age are pulling in the wrong direction without even realizing it. Here is the exact system to stop being financially invisible. Step 1. The utilization ceiling. Most people think paying your credit card bill in full every month is enough. It's not the full picture. That is a trap. What actually matters is your utilization, the percentage of your credit limit you're using at the exact moment your statement closes. Even if you pay it off completely a week later, the number reported to the bureaus is the snapshot taken before you paid. If your limit is $1,000 and you're spending $600 of it, that's 60% utilization. And that number alone can quietly tank your score, even with a perfect payment history. Think of it like walking into a buffet. Show up starving and pile your plate to the edge, and it looks reckless. Show up with a light appetite and take a little. It looks controlled. Lenders read your utilization the same way. The magic number to stay under is 30%, but if you want to actually impress the algorithm, get under 10%. This one habit alone can move your score faster than almost anything else on this list. Step 2. The aging trick. Here's a mistake almost everyone makes the second they clean up their finances. They get their first real credit card, stop using their old student card, and close it. It feels responsible. It is actually sabotage. Credit age isn't about how old you are. It's about how old your accounts are, averaged together. That old, embarrassing student card with the tiny limit? It's quietly one of your most valuable financial assets. The moment you close it, its age stops counting toward your average, and your credit history effectively gets younger overnight. Think of credit age like aging wine. You cannot rush it. You cannot fake it. The only way to get more of it is to not throw away the bottle you already started aging years ago. Keep old accounts open. Use them once every few months for something small, like a subscription, so the issuer doesn't close it on you. Let them sit there quietly, working in your favor. Step 3. The dispute loophole. Here's the part that genuinely makes people angry once they learn it. Credit reports are riddled with errors, wrong balances, accounts that aren't even yours, late payments that were actually on time. And these mistakes don't fix themselves. They just sit there, dragging your score down until you catch them. You are legally entitled to pull your full credit report from all 3 bureaus for free. Go through it line by line. If you find an error, you file a dispute directly with the Bureau, in writing, with any proof you have. By law, they have to investigate it, usually within 30 days. If they can't verify it, it gets deleted. Not adjusted. Deleted. This is not a loophole in the shady sense. It's a built-in consumer protection that most people never use, simply because they never check. People have watched their scores jump by dozens of points in a single month just from cleaning up errors that were never theirs to begin with. Step 4. The piggyback method. Now for the fastest lever of all. If you have someone in your life who trusts you and has excellent long-standing credit, a parent, a spouse, a sibling. Being added as an authorized user on their older credit card doesn't just let you use it. In most cases, that entire account's history, its age, its perfect payment record, its low utilization, gets copied directly onto your credit report. You don't even have to actually use the card. Some people have added over a decade of credit age to their file in a single phone call. This isn't a trick or a loophole that will disappear. It's baked directly into how the scoring models work. It just requires trusting the right person and being trusted back. So, to recap the blueprint. First, keep your utilization under 30%, ideally under 10%, right before your statement closes. Second, never close your oldest accounts. Let them age like wine in the background. Third, pull your credit reports and dispute every error you find because deleted mistakes mean instant points. And fourth, if you can, get piggybacked onto someone's older, healthier credit account. Master these 4 levers, and you stop competing against decades of other people's credit history, and start building your own financial reputation on your terms, years ahead of schedule. Now remember, I am just a girl on a whiteboard. I'm not a credit counselor or a financial advisor, so treat this as a starting point, not gospel. Always double-check with your own bank or a professional before making moves. But if this helped you understand the score that's been quietly judging you, that's not because older people are smarter with money. It's because credit scores reward one thing above almost everything else: time. And time is exactly what you don't feel like you have. Hit that subscribe button right down below so you don't miss next week's video. I will see you then.